Practical Elliott Wave Trading. In this tutorial, you will learn how to identify trending and non-trending wave structure, and then how to identify Elliott wave structures. Once you have learned the basics of Elliott wave structure, then we will go ahead to identify levels where some of the waves terminate, and then we'll infuse the knowledge of Elliott wave structure into a proper trading method. So let's go ahead and learn about Elliott wave theory. Elliott wave theory was first introduced by R.N. Elliott. Theory suggests that the ebb and flow of prices tend to unfold in 5-wave trending and 3-wave correcting structure. Thus, Elliott wave consists of 5 trending wave structure and 3 non-trending wave structure. Following image shows how an Elliott wave unfolds itself in the markets. You can see here wave 1, wave 2, wave 3, wave 4 and wave 5. These are trending wave structure or non-overlapping wave structure, and then this wave structure is followed by a corrective wave structure of A, B and C. So Elliott wave structure consists of one trending wave structure which is divided into 5 wave structure, and there is one corrective wave structure which is divided into 3 wave structure of A, B and C. There are 3 golden rules for trading Elliott wave structure. First rule, wave correction, wave 2 correction is never greater than wave 1. Rule number 2, wave 3 is longest wave structure of 5 non-overlapping wave structure. Wave 4.3, wave 4 never overlaps with wave 1. In the following image, you can see this is wave 1 followed by wave 2, and you can see wave 2 is never greater than wave 1. This is the first and most important point of Elliott wave structure. Wave 2 should never be greater than wave 1. Second important rule, wave 3 is the longest wave structure among these 5 non-overlapping wave structure. Wave 3 has to be the longest of these 5 non-overlapping wave structure. Point 3 and most important point is that wave 4 never overlaps with wave 1. Since this wave is moving towards upside, wave 4, the bottom of wave 4 will never overlap or touch or mix with the top of wave 1. You can see the red line, and wave 4 is well above the red line, suggesting that wave 4 is not overlapping with wave 1. So these are the 3 most important rules. First one, wave 2 is never greater than wave 1. Second one, wave 3 is the longest of 5 trending wave. And third one, wave 4 never overlaps, intermingles or mixes with wave 1. Non-overlapping wave pattern is characteristics of a trend. Hence, every trend must possess the quality of non-overlapping wave pattern, whereas every correction must possess the quality of overlapping wave structure. Thus, if a market is trending, then it must be made of non-overlapping wave pattern. And if a market is in a correction, then it will be consisted of overlapping wave pattern. Or if you take this other way around, if you see overlapping wave pattern, it is safe to assume that market is correcting itself. If you see non-overlapping wave pattern, it is safe to assume that market is in a trend. As you can see in the following chart, a trend is a structure of non-overlapping wave pattern. You can see no correction mixes, touches or intermingles with its previous correction. Every correction is well above its previous correction, suggesting that this is a non-overlapping wave structure. And thus, when you see a non-overlapping wave structure, it is safe to assume that it is in a trend. In the following chart, you can see the wave structures are overlapping each other, mixing or intermingling or touching each other. You can see here in this upside wave structure, each wave is mixing with its previous tops or bottom. Similarly, in this downside wave structure, each wave is mixing with its previous wave, suggesting that the following down move is in a kind of correction. Similarly, this up move is in a kind of correction. So, if there is a correction, one of the most important point to note will be overlapping wave structure. Which are trending wave structures and what are non-trending wave structures, overlapping and lapping and all those stuff. Now let's go ahead and learn the characteristics of some of these waves, like wave 1, wave 2, wave 3, wave 4, wave 5 of a trending wave structure. Similarly, we will learn the characteristics or how wave A, B and C unfold themselves. So our first in line is wave 1. It is the first wave in 5-wave Elliott wave and a trending wave structure. It can be further divided into 5 non-overlapping wave structure. So usually, if it is an upside trend, wave 1 will unfold itself in a trending wave structure in a 5-wave non-overlapping wave structure. Wave 2 is second wave in 5-wave Elliott wave and is shorter than wave 1. Remember that it is one of the most important point in Elliott wave structure. Wave 2 is never greater than wave 1. Wave 2 is also a corrective wave consisting of overlapping wave structure. So usually or mostly wave 2 will unfold itself in a simple ABC correction or some other kind of complex correction. Nonetheless, wave 2 is never greater than wave 1 and it is a corrective wave structure. Wave 3 is a third wave in Elliott wave structure and is a trending wave structure. Wave 3 is also the longest in 5-wave structure. Since it is a trending wave structure, wave 3 will unfold itself in 5 non-overlapping wave structure. Alright, wave 3 will unfold itself in 5 non-overlapping wave structure. Even if it fails to unfold itself in non-5 wave structure, nonetheless it will unfold itself in non-overlapping wave structure, since that is the essential of a trending wave. Wave 4 is fourth wave in the 5-wave structure. It is also a corrective wave. One of the most important rule is wave 4 never overlaps with wave 1. Since the whole 5-wave structure is a trending wave structure, it is one of the most important rule to qualify itself as a trend that no corrective wave overlaps with its previous corrective wave. As a result, wave 4 never overlaps with wave 2 or wave 1. So, wave 4 is a corrective wave structure. It never overlaps with wave 1, and being a corrective wave structure, it unfolds itself in ABC corrective wave structure, ABCDE corrective wave structure, or any other kind of complex wave structure. Next is wave 5. It is the last of trending wave structure in Elliott pattern. Being a trending wave structure, it will unfold in 5-wave non-overlapping wave structure. Even if it fails to unfold in 5-wave, nonetheless it will unfold itself in non-overlapping wave structure, since that is the characteristics of a trending wave. Trend of Elliott wave terminates at termination or of wave 5, giving way for correction. Once wave 5 terminates, once wave 5 come to an end, it will give an end to the trending wave structure and lead the way to correction. How correction unfolds is up to the market, but most of the time you will find an ABC simple correction. After 5-wave of trend comes correction. A correction consists of Overlapping wave structure. A simple correction consists of three waves: wave A, wave B, and wave C. Wave A. Wave A is the first wave in correction pattern, and wave A unfolds itself in five-wave non-overlapping wave structure. Wave B is second wave in corrective wave pattern. Wave B is a corrective wave consisting of corrective wave pattern. So even in A, B, C wave structure, wave B is a correction followed by five wave of wave A. So wave B unfold itself in any kind of corrective wave pattern, that is overlapping wave structure. Next is wave C. Wave C is the last wave in three wave simple correction pattern. It consists of trending wave formation of five non-overlapping wave structure. Once wave B is completed with its correction, it gives way to wave C. Wave C is the last wave in three wave simple pattern, and a correction is followed by a trend, and a trend is followed by a correction. So once wave B correction is complete, it gives way to wave C trend. And since wave C is a trending pattern, wave C unfolds itself in five wave non-overlapping wave structure. As you can see in the following chart, wave 1, you can see wave 1 unfolds itself in five wave structure. 1, 2, 3, 4, 5. Five wave non-overlapping wave structure. So wave 1 is a trending wave structure. A trending wave structure is followed by a corrective wave structure. A corrective wave structure of A, B, and C, which make out wave 2. Once wave 2 is complete, a corrective wave structure is complete. It is followed by another trending wave structure of non-overlapping wave pattern, that is 1, 2, 3, 4, 5. Once a trending wave structure is complete, it is followed by a corrective wave structure of A, B, and C. Once the corrective wave structure is complete, it is followed by a trending wave structure of 1, 2, 3, 4, 5. Once wave 5 of bigger wave 5 is complete, once the trending structure is complete, it is followed by a corrective structure. So once wave 5, larger wave 5 is complete, it is followed by 1, 2, 3, 4, 5 non-overlapping wave structure of wave A, followed by A, B, C correction of wave B, followed by 1, 2, 3, 4, 5 non-overlapping wave structure of wave C. So you can see there are waves into waves. Thus it is said Elliott wave structure is never out in the market, is never out of market. Many traders assume market is always in any one or other type of Elliott wave structure. Sometimes you will find Elliott wave structure on monthly charts, other times you will find them on weekly charts, and at other times you will find them on daily charts. Those wave structures that are unfolding themselves on daily charts, if you use a hourly chart, you will find that each wave of daily chart is unfolding itself on hourly chart in the similar fashion. As you can see here, a trending structure followed by a correction, trending structure followed by correction, trending structure. This gives way. This concludes the higher time frame 5-year structure. And then again it is followed by trending structure, correction, trending structure. This concludes higher time frame correction. If we were to go up, you might say that this itself is a trending structure, this itself is a correction, which would conclude wave 1 and wave 2, followed by a trending structure of wave 3, and followed by trending corrective structure of wave 4, and so on. So market is always in one or the other type of Elliott wave structure. Market never runs out of Elliott wave structures. You can find these Elliott wave structures on 5-minute chart, 15-minute chart, hourly chart, daily, weekly, monthly, yearly, quarterly, whatever the time frame, you'll find Elliott wave structure unfolding in the market. But if you were to plot Elliott wave structure on every chart, it is not only a tedious work, but it is also far more confusing. Hence, it is better to identify a practical wave structure and make a method to exploit that wave structure. For example, once wave 1, 2, 3, and 4 are complete, you know that wave 4 is followed by wave 5. Wave 5 goes to make a new high. So once wave 1, 2, 3, and 4 are complete, you are in a position to make a judgment that wave 5 will follow completion of wave 4. You can make an entry at completion of wave 4 to exploit wave 5, which is one of the most widely used Elliott wave trading method. Enter at the completion of wave 4. Another widely used Elliott wave method is entering at completion of a correction. If there is an ABC correction, enter when wave C structure is complete. As you can see here, once you know wave C structure is complete, you can go long assuming that it will follow a 1, 2, 3, 4, 5 non-overlapping wave structure to make a new high. Thus, every trending wave can be identified into 5 non-overlapping wave structure, and every correction can be identified into 3 overlapping wave structure. But 5-wave Elliott wave pattern are not frequent into markets. Hence, it would be unwise to press Elliott wave on every wave structure. I've said to you, market is always in one or other form of Elliott wave structure, but it is not easy to plot those wave structures clearly. Sometimes it is far more confusing. Hence, it would be unwise to press Elliott wave structure on every wave structure. 5-wave trending pattern and corrective ABC pattern are not so frequent and must be plotted only when the conditions are met. Only when you see a clear unfolding of these patterns, you must assume that an Elliott wave structure is present, rather than pressing these Elliott wave points on every or any kind of wave structure. We learned about wave 4 exhaustion levels, and we learned on chart how we can plot Fibonacci extension ratios and use oscillators to understand levels where wave 4 might terminate itself and make an entry to exploit the new trend. Let's go ahead and learn about wave C exhaustion level. Once ABC correction is complete, a new trend resumes in the direction of original trend. Exhaustion level of wave C can be plotted with the help of wave B and wave A using ratios and extensions. Since wave C unfolds itself in 5-wave pattern, internal structure of wave C can be used to plot termination of wave 5 and thus completion of ABC. Wave C tends to terminate at 61.8, 78.2 and 100%, 138.2 or 161.8% of wave A. These are the important levels or ratios that you need to remember while plotting ratios on wave C. So termination of wave C is at 61.8, 78.2, 100%, 138.2, 161.8% of wave A. Termination of wave C is at 100%, 127%, 138.2 and 161.8% of wave B. Once a level is marked and if market finds support or resistance at those levels, oscillator can be used to judge momentum condition and make an entry. Let's go ahead and learn from some examples. Following is Andhra Bank weekly chart, and as of the last bar, you can see it looks like prices are unfolding themselves in ABC wave structure. Alright, we don't know that, but assuming that prices are unfolding themselves in ABC wave structure, We will go ahead and plot levels for termination of wave C. As of the last bar, you can see oscillator is very close to oversold zone. Let's go ahead and add extensions and ratios. First, I will label the charts. This is supposedly wave A and this might be wave B. Alright, I don't know. Unless wave C confirms itself, nothing can be said about this upside wave structure. But momentum suggests that upside momentum might be limited, which means this might be an ABC corrective wave pattern. Let's go ahead and add extensions. I'll use extension of wave C and ratios of wave A. So using extensions of wave C and ratios of wave A, we find a tight cluster at this level of 130 here, and next tight cluster is there are no other tight clusters, I believe. Yes, there is another tight cluster at 122, 3 to 121 here, right? Okay, now that we have tight clusters, we will remove these ratios out to clear the way, and let's see what happens with price. Let's add some bars. You can see prices has hit the cluster of 130 and oscillator has reached over pot zone. Price find resistance at 130. As of the previous bar, as of this current bar, oscillator has given a crossover and it sells down. As of this bar, oscillator has given a negative crossover with pink below the page line. So you take a sell trade at this level below this bar with a stop above the swing high. Add some bars to see what happens next, and prices go ahead to make a new low. Our next example is Bank of Baroda daily chart, and as of the last bar, which is 16 May 2013, you can see prices are correcting itself upwards. The major momentum is towards the downside and prices have just started to correct itself up. As of the last bar, the pattern looks like an ABC correction. We don't know for certain, but overall momentum is towards the downside. So this would be a correction. So one of the rules that says is a correction will terminate itself on 50, 61.8 or 78.2% ratio of its previous trend. Since this looks like a major trend, we will choose ratio of this trend as well to plot the level where this ABC correction might come to an end. I'll zoom in. You can see it's the price, the nearest ratio is 765. I'll plot extension and ratios of A and B to see if we find another closest price cluster. Let's go ahead. We use this extension of wave B and then I'll use ratio of wave A. So the closest nearest price cluster is around the range of 160, 750 to 106, sorry, 750 to 765. Next closest cluster is at 800 level, followed by 820 level. So these are the three nearest price clusters. As of the last bar, stochastic oscillator is nearing overbought zone. Let's add some bar. So now that we have marked the price clusters, I'll simply remove these extension and ratios out. But before doing that, let's see what all things we have plotted on the chart. We have plotted ratio of this previous downside trend. Then we have plotted an extension of wave B. And third one, we have plotted extension and ratio of wave A from the bottom of wave B. So I'll clear these things out. So we have these three important price clusters. Let's go ahead and add some bars. Okay, as of the last bar, prices have hit first cluster of 760 range, and stochastic oscillator has given a bearish crossover, and you can see the bar itself has given a negative sell. In fact, a reversal day where it opened above the high of previous bar, made a new high but failed to sustain the higher levels and gave a negative closing. So we place a sell stop below this bar low, add one more bar. As of the last bar, sell stop is triggered. So we place a stop loss above the swing high. Let's add some bars. And prices go down to make a new low. So with the help of ratios, extension and oscillator, we can find level where prices might terminate themselves, find support or resistance, and the trend will terminate itself to start a new trend in the new direction. So now that we have learned the characteristics of each wave structure, let's go ahead and learn about tools which we will need to make a practical Elliott wave trading system. The best tools for trading Elliott waves suggested by R and Elliott are Fibonacci ratios and extensions. One, you need a Fibonacci ratios and extensions, and next you will do with any momentum oscillator. You can also use higher time frame, wave position or momentum position as a filter for entry and exit considerations. Fibonacci ratios and extensions. Fibonacci numbers were introduced by Leonardo Fibonacci, an Italian mathematician. Important Fibonacci ratios which we will use for Elliott wave trading are 50%, 61.8%, 78.2%, and 100%. It's better you by heart these numbers. This is one of the most important, and you will find waves, corrective waves terminating around these ratios more often than not. Important Fibonacci extensions are 127%, 138.2%, and 161.8%. Finding termination of waves. Fibonacci ratios and extensions are of utmost importance when it comes to finding termination of waves. A correction most of the time will terminate at around 50%, 61.8 or 78.2% ratios of previous trend. A trending wave structure will terminate at 127%, 138.2% or 161.8% of previous corrective wave structure. Let's take a look at an example. Following is a diagram where you can see the upward moving line, black line is a trending, denotes a trending wave, and downward coming black line denotes a corrective wave. The trending wave from top to bottom is measured and its ratios are plotted. Green is 50%, followed by 61.8, followed by 78.2. And most often than not, you will find corrective wave structure finding support or resistance at these ratios. So this is how ratios are plotted. You take full measurement of the trend and you simply plot. I will show you in AMI Broker in a trading software how to plot ratios and extensions. But for now, you need to know how ratios work. You can see what ratio does is it geometrically divides a trending wave structure into 50, 61.8 and 78.2% ratios respectively. Similarly, when you are using an extension will plot the ratios of 127, 138.2 and 161.8% on the upper side in an extended manner. So this is the corrective wave structure which is taken into consideration while plotting the extension. So these extensions are calculations of these corrective wave structure. As I already said, a trending wave structure is followed by a corrective wave structure, which is again followed by a trending wave structure. And a trending wave structure terminates at one of these levels of corrective wave structure. For now, it is important to know what are extensions and what are retracements. So now that we have known extensions and retracements, let's go ahead and learn about oscillators. Oscillators can be of great use if we know how and when to use them. We know wave 4 termination is followed by wave 5, which goes to make new high or new low. We also know an ABC correction is followed by a trend that lasts for 5 waves at least. Oscillators can be used to find when momentum has reached its extreme for a trend. Following is a chart, a weekly chart of Helios map, and you can see the script has unfolded itself into 5-wave non-overlapping wave structure spanning over a period of July 2013 to current 2015. Below is stochastic oscillator plotted with a setting of 1255. You can find stochastic oscillator in any trading chart. It is one of the standard oscillators found in every charting software. Once a stochastic oscillator reaches above the level of 80, the white dotted line denotes an 80 line. Once this oscillator reaches above the level of 80, it is considered the oscillator has reached overbought zone. When this oscillator reaches below the level of 20, it is considered the oscillator has reached oversold zone. You can see every time a wave terminates, oscillator has given extreme momentum reading, suggesting that the momentum in the move has come to a halt or has come to an end. You can see a wave 2 termination and oscillator has given a lower momentum reading, suggesting that the momentum in the wave 2 has exhausted. Similarly, when it came to wave 4, oscillator gave a lower momentum reading, suggesting downward momentum of wave 4 has come to a halt. You can see here wave 3, the momentum gave an exhausted momentum reading, but then it lingered in the extreme level. Since wave 3 is the longest wave structure in Elliott wave structure, this is expected of momentum oscillators to hang themselves in overbought zones. Similarly, if it was a negative wave structure, downward moving, you would expect the oscillator to hang itself in oversold zone when wave 3 was unfolding itself. Our next chart is Allahabad Bank weekly chart, and you can see Allahabad Bank has unfolded itself in a 1, 2, 3, 4, 5 non-overlapping downside wave structure, and once a 5-point non-overlapping wave structure is complete, it is followed by an ABC correction. As of the wave C corrective high, oscillator has reached in overbought zone, suggesting that the upward momentum in the script has come to a halt, has come to an end. Once it comes to an end, it is followed by a downward move. So now that we have learned, every time a wave structure has come to an end, you will find oscillators hanging in overbought or oversold zone, suggesting that also supporting the wave that the wave structure might have come to an end. That brings us to our next and most important question. Which wave to trade? Most profitable ways to exploit Elliott waves are to trade wave 5 and wave and ABC corrections. Make entry to capture wave 5 at termination of wave 4. Make entry to capture next trending wave at termination of ABC correction. In order to capture wave 5, we need to know termination point of wave 4. Similarly, in order to capture next new trend, we need to know termination of wave C, point of termination of wave C. Exploiting wave 5. One of the easiest way to capture wave 5 is to make an entry on termination of wave 4. Although wave 3 is longest, but trading wave 5 is easiest. So in order to capture wave 5, we need to make an entry at exhaustion of wave 4. How to find levels where wave 4 might exhaust? Wave 4 exhaustion level. We can make use of Fibonacci ratios and extensions to find levels where wave 4 might exhaust. Our view will also be supported by oscillator when it reaches oversold or overbought zone or its extreme momentum zone. Wave 4 exhausts at 50%, 61.8% or 78.2% of wave 3 and 127%, 138.2% or 161.8% extensions of wave 2. So, ratios of wave 3 and extensions of wave 2 can be used to find levels where wave 4 will come to an end, might come to an end. Internal structure of wave 4 can be studied to identify corrective pattern. If there is a simple ABC structure formation, then termination of wave 4 can also be plotted to find level for termination of wave 4. The following is a chart of Bank of Baroda, a daily chart for 11 November 2013. As of the last bar, you can see it has unfolded itself into 5 non-overlapping wave structure. Following is a weekly chart of Vadilal Industries. As of the last bar, you can see wave 4. It looks like wave 4 is unfolding itself as it qualifies the rules of non-overlapping wave structure, that is 1. And you can see wave 1, wave 2, wave 3, which is the longest of the 3 waves. And you can wave 4 is unfolding itself. Let's go ahead and find out the levels where wave 4 might find support. As of the last bar, stochastic oscillator has reached oversold zone, suggesting the momentum, downward momentum in the following chart is limited. Now we will go ahead and plot our extension and ratios to find a level where this stock might find support. So let's go ahead. First of all, I will add ratio of wave 3 here. So what I have done is I've selected the ratio tool, Fibonacci ratio tool in my charting software. Then first I clicked on the low of wave 3 and then the high of wave 3 and simply plotted the ratios. You can see ratios have been plotted 50, 61, 78.2. As the last bar, it looks like it is very close to 50% of wave 3. Next, we will plot the extension of wave 2. This is extension tool. I'll first measure the distance of wave 2 and then I'll simply place it on the top of wave 3. There you can see different ratios have been plotted. I'll just clear the chart and remove the ones which are not important. These ratios are not important, but the extension levels are important, so I'll keep them. There is a cluster of various prices, but the nearest cluster of prices is this range. You can see this is the nearest cluster of prices. Next, there are no other closer cluster, so we'll keep this range for now and delete all others. Example, in this I'll remove simply these things out. Similarly, this part I'll keep 127, 168 and remove all others. Okay, so there is our cluster. So what does this suggest? This suggests that there is a price range where wave 4 might terminate. That is point 1. Point 2 is stochastic oscillator has reached its oversold zone, suggesting that the downward momentum has come to an end. Now let's go ahead on daily to see if wave 4 has any wave structure which might come to our aid. Click on daily wave, zoom out a bit. You can see wave 4 is unfolding in some kind of complex corrective wave structure. There is no reliable wave pattern, but since the last bar is very close to the termination level of wave 4, what I will do is I will use extension of this last wave to see if it gives me any important level, right? So I'll remove the ratios out of it and keep just the extensions. There you go. You can see both these extensions suggest that 190 is an important level. So I will reduce this square box here. As of the last swing, it suggests that 190 is an important level. From level of 186 to 194, this stock might find a reversal. Okay, we will go back to our weekly chart and I'll simply clear all the ratios and extensions and only keep the box. There. Now we have the box. So what is our trading method now? We know the level where prices might find support and reverse. We have an oscillator that says prices might reverse. From here, the downward momentum has come to an end. So we'll make an entry once oscillator gives us a reversal signal. Let's go ahead and add some bars. You can see prices found support exactly at that level. And as of this bar of 10:31, oscillator gave a crossover. So make an entry on this point. With the stop of this swing low, your stop is kept at this level. And what is our target? Let's forget about target for now. We will concentrate on termination of wave 4 and entry. Let's go ahead and add some bars. You can see it goes out to make a new high. Our next example is a weekly chart of Helios math, which I have already shown you earlier. Nonetheless, we'll take this example once again. First, we'll study the level, the condition of the wave. As of the last bar, it looks like wave 4 is unfolding itself. we have a clearly identifiable structure of wave 1, wave 2, and the longest of all three is wave 3. And it looks like wave 4 is unfolding itself. Let's go ahead and add extension and ratios to find out the level where wave 4 might terminate itself. So first I will use ratios of wave 3. So I have a ratio, then I'll use extension of wave 2. Here I have extension of wave 2 as well. As of the last bar, you can see there is strong price cluster at this level as well as at this level. Now we will go on to daily chart to see how wave 4 is unfolding itself. You can see there is a very strong sell down. I'll go ahead and add some bars. It looks like prices found a support at 90. Let's see what happened on weekly chart. As of the last bar, I'll clear some of these. Okay. As of the last bar, you can see momentum has reached oversold zone, suggesting that downside is limited. Prices have found support just above our level, the box that we had created. So what do we do next? And wave 4. Take a look at wave 4. It looks like it is turning itself into some kind of complex correction. Next, we have a crossover on stochastic oscillator. The pink line is above its beige brother, suggesting that oscillator has given a crossover. So all we need to do is place a buy stop one tick above the weekly bar and place a stop loss below the swing low. Let's go ahead and add some bars. You can see as of the last bar, prices have come in the zone of 50%. Oscillator has again given a bearish crossover, so we don't make any entry. But since it has made a new swing, we can go on daily to add some more extensions to see where prices might terminate themselves. I'll use the extension ratios and remove ratios. So all these extensions are clustered very tightly in the range of 85 to 80. This becomes so our new box is adjusted to the new extensions given to us. I'll remove these extensions out so we can watch clearly. Split this box a bit every time. Okay, remove these extensions. Now we have a new box. We'll go back to weekly and see what happens next. It comes down, broke through the box, came straight to the level of 161.8, and as of the last bar, so our box was prices didn't find support in the level, but prices did find support at 61.8% ratio of wave 3. As of the last bar, I'll simply clear this box out. As the last bar, stochastic oscillator has given a bullish crossover at some bar. Crossover continues to exist. Add one more bar and we go long at this level with a stop on this swing low. Let's go ahead and add some bars. And prices go ahead to make a new high. So with the help of Fibonacci extensions and ratios and any kind of oscillator, I am using stochastic oscillator, but you can use whichever oscillator you're comfortable with as long as it serves your purpose. With the help of these oscillators and Fibonacci ratios, it becomes very clear, or it aids us to understand exhaustion level of wave 4 and make an entry to exploit the new trend of wave 5. Let's go ahead and see how we can use this extension and ratios with identifying the end level of wave C, that is the end of a correction which is followed by a new trend. Now that we have learned how to find levels where prices will find resistance or support and trends will terminate, next we will learn how to find targets for wave 5 and targets after ABC correction is complete. When trading for wave 5, when we are looking to catch wave 5, best suitable target is 127% extension or of wave 4. When entering a termination of ABC correction, best target is 127% extension of ABC correction. Stop loss is to be kept at extreme point of swing high or low depending on entry, and stop loss can be revised at swing low or oscillator reversals. One of the next most important point to learn and to incorporate in any trading method is trailing stops and protecting any profit that are made. One of the best way to trade is using trailing stop to protect any profit made after entry. Stop loss can be trailed on 1 bar basis or tighten your stop loss when oscillator reaches extreme zone. Instead of booking profit at 127%, one can tighten stop loss to 1 bar low or high to take advantage of any large move. You will have to choose one method that suits your temper and stick to it. Either you can use a 1 bar low trailing stop, or you can use oscillator crossover trailing stop, or you can try to tighten your stop once oscillator reaches an extreme zone after you make an entry. No matter what profit booking and profit protecting method you use, it is important that you never let your profits turn into losses. So once you enter into a trade and you see the position moving into your favor, it is very important that you protect your profits, that you revise your stops to protect your profits or limit your losses. So we are back to our Bank of Baroda chart, and as of the last bar, a sell short entry is made into the trade, and since it is an ABC correction that we are trading, profit target for this correction is 127% of the correction. So 593 is the target for this current trade with a stop at a level of 760. Once an entry is made and a stop loss is placed, the next and most important level to understand. So once an entry is made and stop loss is placed, next comes managing your trade. There are a few things you can do here to trail your stops every time there is a swing low, another every time there is a swing high. Next one is not to touch your stops until prices make a new low, and third one could be to trail your stops when momentum oscillator reaches over sold zone. Nonetheless, whatever method you use, it is important that you never let your profits run into losses. So for our current purpose, what I'll do is every time there is a swing high made, I will revise my stops to a swing high, and once prices make new low, I will protect I'll tighten my stop to 1 bar high. Alright, let's go and add some bars. You can see this is a swing high that is higher than its previous high that is surrounded by lower highs. So I could have protected my stop to this level. Then this one is a swing high that is higher than its surrounding highs. So revise stop to this place and add some more bars. One more swing high here. I'll revise my stop to this place, and you can see oscillator raised oversold zone at this point. Nonetheless, I am determined to move my stops to swing high until prices make a new low. Once prices make a new low, I will tighten my stop to 1 bar high. So I have a clear trailing stop idea in my mind. So no matter what market does, I will use my methods. As of the last bar, prices broke down to a new low. So I'll revise my stop to 1 bar high from here, and as of the last bar, I am stopped out here. On this day, I was stopped out at a level of 637. Never mind, I could never reach my target level, but even then, the risk to reward ratio on this trade was much better. You can see going ahead, target was met as well. Following is a Vadilal Industries weekly chart, and as of the last bar, you can see prices seems to be making a wave 4 swing low. Stochastic suggests prices have reached oversold zone. I'll plot extensions and ratios, wave 3 extension, wave 3 ratio, and wave 2 extension, giving me a tight price cluster of 190 to 175. So I'll delete these extensions and keep only ratios. Go ahead and add some bars to meet this weekly. Add some bars, and as of this bar, you can see stochastic oscillator has given a bullish crossover. Prices found support in the region of 190, that is 50% of wave 3. So we make a long trade at 120, 220, I'm sorry. Clear these extensions and ratios out with a stop at swing low, which is at 195. Target for wave 5 is 127 of wave 4. Okay. So how do I manage this trade? I have made my entry, I have kept my stop loss. Now I need to manage the trade. The idea is simple. Since this is a weekly chart and there are not much bars for wave 4 low, so I will use a trailing 1 bar stop once prices make a new high. Once prices hit 127%, I will either take my trade out at 127 or I will continue to use 1 bar stop low method. Let's add some bars. Prices made a new high. At the same time, prices hit the level of 127. If I was using 1 bar low trailing stop, I'm still in the trade, or I could have taken my profit out at 127%. Let's assume that we are using 1 bar low stop and add some bars. So as of this bar low, we could be stopped out at 269. So we made an entry at 220 with a stop at 195 and made an exit at 269. So Trading Elliott wave, the idea is quite simple. Choose which wave you wish to trade. One is to trade end of wave 4 and another is to trade end of correction of ABC. No matter which wave you have chosen to trade, use Fibonacci extension and ratios to plot a tight price range where wave might terminate. Use stochastic oscillator to judge the momentum and make an entry on momentum crossover. So that brings us to last part of our tutorial, that is putting it all together. In order to successfully trade Elliott wave, you need to 1. Identify Elliott wave structure. 2. Identify levels where wave will terminate, an entry can be made, and where to place a stop loss. 3. Identify levels where profits should be booked or stops should be tightened. And 4. Use trailing stops to protect any profits that you made. So even if you learn to identify Elliott wave structures, it is very important that you make or build it around a sound trading system that has sound entry rules, sound stop loss rules, sound trailing stop rules, and sound profit booking rules. No matter how well you are versed with Elliott wave or how better you get on identifying the waves, without a proper trading method, you won't be able to take 100% advantage of your knowledge. Hence, it is important to use Elliott wave structure with other instruments of identifying level of termination and entry and exit rules. So that concludes our tutorial of practical trading of Elliott wave structures.